Hello guys, and welcome to the next lecture in section 4 where I will explain the first two candlestick patterns called the hammer and the shooting star patterns. As the name suggests, hammer pattern looks like a hammer. It occurs after a downtrend and signals bullish sentiment with the buying strength coming back into the market. On the other hand, shooting star is the opposite candle formation to hammer, and a shooting star appears after an uptrend and signals the bearish sentiment with selling strength entering the market. Let us quickly look at a typical hammer and shooting star formation using an illustration. A hammer signifies that sellers were able to push the prices lower initially before the buyers took control of the price, and the closing price is well above the opening price of the session. The lower tail or wick of the hammer candle is usually twice the size of the real body of the hammer. A shooting star on the other side brings a pause to the buying strength as the buyers were able to push prices higher early in the session before sellers are able to close the session well below the opening price of the candle. The upper tail or wick of the shooting star candle is usually more than twice the size of the real body of the candle. Please note that it is possible for a shooting star to have a small lower wick and for hammer to have a small upper wick. Guys, for both of these patterns, the lower tail for the hammer and the large upper tail for the shooting star is a sign of increased strength associated to this pattern. Now, when it comes to taking trading positions based on these patterns, you will always consider following key points. Whether a shooting star pattern or a hammer appeared after a clear uptrend or downtrend respectively. This means that the importance of the pattern increases when they appear after clear market trends. Whether these patterns are also associated to key support and resistance zones on your trading chart. If this happens, you are able to trade these patterns with increased confidence. While one shooting star after a clear uptrend signals the bearish sentiment, however, if you see 2 or 3 consecutive shooting stars, then this is adding even more bearish sentiment in the market. Exactly the same guidelines apply for consecutive hammer patterns. Now let us study what we've learned in this lecture through examples. Guys, the first example is of pound and Japanese yen forex pair, and we are looking at a shooting star formation. Notice how the price rallied in an uptrend on this pair before a shooting star appeared at this key support zone. Also notice the large upper tail of the shooting star, which explains that buyers failed to push prices higher during this trading session. In addition, following this shooting star, price fell sharply on this pair towards the next key level. Let's look at another example of shooting star. In the next example, we are looking at daily chart of euro-dollar forex pair. Once again, notice that the market was in clear uptrend prior to shooting star candle. Guys, I want you to compare the real bodies of the shooting star examples you have studied so far in this lecture. A shooting star indicates bearish sentiment, but a shooting star with a bearish colored body is of increased strength. Once again, price declined here, and another shooting star was recorded after few sessions before price declined sharply. Let us study another example of shooting star now on Swiss franc and Japanese yen forex pair daily chart. As you see here, after a clear uptrend, a shooting star appeared with a long upper wick at key support level, and price fell sharply after that. In addition, once price reached a key level which acted as a resistance, a hammer candle appeared indicating the buying strength on this pair as price went higher in a sideways movement. The next example is of hammer on crude oil daily chart. See how this pattern appeared on a major support level with a large lower tail indicating the buying strength in the market. Moreover, following this hammer, price rallied sharply towards the next key resistance level. Let's study one final example in this lecture. Now we're looking at pound dollar on a daily chart to study another strong hammer formation. The color of this hammer formation is also bullish, hence indicating increased buying strength in the market. And once this hammer candle appeared at a major support, price rallied sharply in an uptrend. Guys, this also concludes this lecture, and I will see you in the next lecture where we study another two of my favorite candlestick patterns.